I mean, think about it. Think about how many times we have done this. Rarely ever. 2001, we break below the 200 week. 2008, support, slight flash crash in COVID. But that's it, guys. Rarely ever do we get to this point in the market. This is one of the most historic moments in stock market history, literally. The stock market is about to close its quarterly candle. The Q3 of 2022 is about to close out. We have about 7 minutes left. This is the 1 minute chart for the S&P 500. Why am I looking at the 1 minute chart? Well, these are the lowest levels of the year. We are just sliding into the end of Q3. Nice and bearish here. Nice and bearish. And if I go over to the 5 minute chart for Bitcoin, just so we can look at the correlation here, well, it is starting to pick up a little bit more. For a while, Bitcoin was kind of holding up against the stock market, which it still is, right? Bitcoin's not at the lows, but you can see that there is still clearly a connection here of human behavior. People see the stock market dumping, and that makes them a little bit uncertain. Maybe they don't want to hold Bitcoin over the weekend, so they sell. This is why the correlation exists. It is still here, right? Of course, this is all just very short-term stuff, but take a look at this chart. And I want you to tell me which line is the S&P and which line is Bitcoin. Did you start leaning into your screen and squinting your eyes to try to figure it out? All right, well, that's the test. They are still correlated. There's no decoupling. What you can see, though, on the weekly chart, it becomes a little bit more clear. That was the monthly. This is the weekly. If you look, okay, it's just doing the same thing. Still hard to tell which one's which, but if you kind of squint your eyes and zoom all the way in, okay, we see a little bit of a difference here at the end. So interesting to see that Bitcoin is holding the lows against the stock market, right? The S&P is dipping into the final quarter here. We have 5 minutes left as I'm making this video. If you look at Bitcoin, it's still above the low. So at least we have a little bit of a more stable market here. What is possible is that the instability in the forex market, the currency market here, all of these currencies just tanking. Of course, U.S. dollar doing well, but it's possible. Now, this is just a theory that maybe some of these people are sort of panicking out of their native currencies and maybe taking Bitcoin seriously as an alternative. It's possible. We talked about that in yesterday's video, that there's a shot that the financial crisis could maybe get the world to think about Bitcoin being an alternative more seriously, right? Maybe. Though it's such a minute scale, it's such a low time frame thing. But this is pretty epic to see the S&P dumping into the last 4 minutes of the day. Check out this chart from Matthew Hyland. He said the S&P 500 is about to have its third consecutive red quarterly candle for the first time since 2008. If that's not bearish, I don't know what is. So today on my channel, we discussed the idea of October, the seasonality. That if you look at the seasonality of the stock market, October is generally a month that yields returns. That essentially September is actually the most bearish month. So if you look at this chart right here, the S&P seasonality, the stock market seasonality, September is the most bearish month, and usually returns follow in the month of October. Now, what's interesting is we are getting that super bearish September close right now. And of course, in a moment like this, it's kind of hard to look at the chart and think, October is going to be bullish because we're just going down. But it's kind of up in the air. Seasonally, historically, we close out September super bearish and then bounce into October. Is it possible? It is possible. I suppose anything's possible right now. But at the same time, we got to remember that, we are in a very different place than maybe most years that would have happened. We have, 3 consecutive red quarterly candles in a row, first time since 2008. If you're just going to trade the market the same as you would any other year, you would be buying this dip right now and expecting returns next month. But again, it's a very different time, very different place, but it's at least something to consider. So I'm bringing this up to you guys right now because recently on my channel, we've been very much focused on the risks and trying to figure out the current global macro recession situation. And we've been very focused on sort of trying to nail all the details and understand what's going on, deglobalization, economic warfare, earnings recession likely coming, war, inflation, recession fears, looking at what the experts are saying. So we've been very much focused on sort of the negative, the down, but I just wanted to make sure that you guys understand that, markets can be volatile. It's not down only. It doesn't have to be. I mean, it seems like it is right now, but I just want to keep make sure that you guys are well informed about the traditional moves of the market, how things usually play out. And October is normally, we close out September super bearish, and that would, bring in the best returns is buying basically this dip historically. October, we see some returns. I just want to make sure you guys are well informed about this so that there's no big surprises or something like that. So there's a lot of risk, guys, and we have there's so much stuff that happened recently, and that's why I'm making tons of videos right now. There's a lot of other channels that have stopped making content because this is actually one of the most interesting times, and I feel like I can't even make enough videos to cover it. The Fed's preferred gauge of measuring inflation, the PCE, came in higher than expected. So inflation coming in hotter than expected. We talked about that today. Likely, this means that Fed's going to have to raise rates. Personal income rose, and also spending rose, which is actually not what Jerome Powell wants, which means rates might be increased even more. People are spending more money. That's bad for inflation, right? The Fed needs to raise rates to sort of constrict the market, create less spending, less growth to get inflation under control. So if we're seeing more spending, the Fed might have to be more aggressive, guys. Might have to be more aggressive, and that might be why we're starting to see this really bearish quarterly close, right? And now we're actually in the final minute of the day here, and there it is. There's the stock market close. So quite a bearish close there. Quite a bearish close. These are the yearly lows, right? These are the yearly lows for the S&P. And we are sort of just in the middle of this down channel, right? At the bottom. And that's kind of, again, I'm more so leaning towards, global recession, macro is bearish, more downside is very likely. We're at a really, really key point. The market is, at the 200-week, at the downward sloping support line. We have conflicting data coming in. PCE, inflation higher than expected, but the consumer sentiment report came in, pretty decent. Consumers are actually expecting inflation to be lower than before. But anyway, I think that we're probably, on Monday going to get a big rally or a big snap below this trend line. Short term, I don't have a strong bias. I don't care about the short term. Would a breakdown like this surprise me? Not at all. Not at all. We've discussed the risks and why all of that is possible. Would a bounce off this area surprise me in the short term? No, wouldn't surprise me because, again, October is seasonally bullish. So, again, I'm not focused on the short term. I don't really care, but I am macro bearish. I do think that this is likely going to continue to the downside. So, short term, whatever. But the 200-week SMA is that recession threshold. And we are now on it directly, guys. It's getting heated. It's getting hot. The temperature is hot in the market right now, guys. It's very historic. I mean, think about it. Think about how many times we have done this. rarely ever. 2001, we break below the 200 week. 2008, support, slight dip, flash crash in COVID, but that's it, guys. Rarely ever do we get to this point in the market. This is one of the most historic moments in stock market history, literally, and we're witnessing it now. Is this going to be a full recession? Are we going to have a real continuation down? Another quarter down like 2008? Well, that is to be determined. But we know the risks. We've discussed the risks on this channel. We shouldn't be surprised by them. And coming into the end of the day here, looking at the 5-minute chart for Bitcoin, again, I'm only doing this because the stock market's out. Look, Bitcoin's coming back into correlation already. Like we were saying on the channel, you know, the idea of a decoupling is still a pie in the sky kind of an idea until there's evidence. And right now, well, you know, again, Bitcoin is not perfectly in sync with the stock market, but I mean, clearly the dumping at the end of the day here for the stock market is the fear is feeding into crypto now. People are uncertain. Again, it's just human behavior, guys. It's just human beings looking at the stock market and getting a little panicky, clicking sell. That's why it's correlated. So until people start to change the way that they treat Bitcoin and regard Bitcoin, it's probably going to remain correlated unless some sort of serious financial issue causes a major shift in, you know, people actually like taking Bitcoin seriously as an alternative, which I guess is possible, but that would probably take time. But anyway, guys, interesting times here. We'll see what happens. Again, October, seasonally bullish, but again, we are in the third quarterly close in a row. The only other time that that's happened was 2008. This is a recession. We are in recession territory, and we are nearly about to pass through the recession threshold, the 200-week moving average. Epic times. I'll keep you guys updated. See you soon.